Hello! So we have a Discord channel. I've decided to put it at the start of the video just so that you can all see. Make sure you join it. It's the link in the description below. It's going to be the hub of the GenX community where we're going to talk about everything. Whether it's crypto markets, normal markets, memes, gaming, you name it, it's going to be there. So by now you will have heard of 3 Arrows Capital. We're going to refer to them as 3AC for this video. And they're at quite a high risk of liquidation. But what's actually happened to them and how did this happen? Can anything be done to lower the risk for them? And what can be done in the future to prevent something like this? Today we're going to talk about everything to do with 3 Arrows Capital. Sit back, relax, and enjoy. So who are 3AC? So 3AC is a crypto hedge fund that was founded by Zhu Su and Kyle Davies in 2012. They invested in all sorts, from blockchains such as Solana and Avalanche and Luna, to even crypto games like Axie Infinity and Crypto Raiders. They're one of the biggest hedge funds in this space, and they had an estimate of around $10 billion worth of assets under management sometime this year, I think it was. It seemed to all start from the Terra Luna collapse, causing the heavy market sell-offs. 3AC got caught in the whole ordeal as they invested $200 million into the project, and that quickly amounted to absolutely nothing, as I mean, you already know that Luna and UST fell over 99% in value. So that $200 million is gone, essentially. But it wasn't really until recently that we knew just how much trouble 3AC were in. We knew they'd invested in Luna, but we didn't really have any knowledge of just how much it had affected the firm. 3AC had positions on many exchanges and lending platforms, and some of those positions were also liquidated recently, causing even more pain and sell-offs in the market. One of the biggest sell-offs that they've actually had is from stETH. So I'm going to go over that now. It's made by the Lido platform, or Lido, where users can deposit Ethereum into the Ethereum 2.0 contract, and they can receive stETH instead, which is stETH. It's supposed to be pegged to the regular Ethereum, but it started to depeg due to heavy sell-offs from the stETH token. A Twitter account called Moon Overlord posted a tweet about the largest wallets selling off staked Ethereum during problems with Celsius. I mean, Celsius was up there as well, but 3AC by far had the most staked ETH sold. And this was kind of confirmed when Zhu broke his silence on Twitter by saying, "We are in the process of communicating with relevant parties and fully committed to working this out." So both the founders of 3AC just had a bit of a silence on Twitter for a couple of days, and both of them have sort of been known in the crypto Twitter space to be quite active. So that silence over the last few days was quite sort of nerving for people because, you know, why have they gone silent? Now we know. Currently, the staked ETH token is worth around 0.94 Ethereum at the time of shooting the video. So it means that 3AC have actually sold at a loss just to cover these margin calls. And onto the topic of margin calls, we'll go over these as 3AC have had quite a few over the past week. We'll start off by saying that the head of trading at 8 Blocks Capital, called Danny Yuan, tweeted that 3AC had removed $1 million from the firm's trading account. They'd worked together for over a year now, and Danny explained that he tried to contact 3AC's operations team about the withdrawal, but he hasn't got a response from their side, so they've essentially ghosted him. He went on to say that 3AC were actually leveraged long everywhere. So we'll talk about what being leveraged means. Being in leveraged trades means that you're borrowing the exchange's capital to increase your exposure to the market. This means that you can make a lot of money, but you also run the risk of margin calls and eventually liquidation if the price falls. There's been a lot of speculation that Zhu has been revenge trading to try and actually make up for the losses that he received from the Luna collapse by leveraging his trades to earn more money. And this has exposed all of his original capital to margin calls and then potential losses of the entire trading amount. So far, FTX, Deribit, and BitMEX have liquidated 3AC's positions as they failed to meet the margin calls. FTX doesn't seem to have commented on the liquidation, and they've just said that if they are required to by law, then they will. Deribit's CEO also didn't really comment directly on the liquidation, but they did mention that they've got a number of accounts that have a net debt to them that they would consider to be quite distressing. And they've said that even if the debts aren't repaid, they will still be healthy. And so what we know is that they owe BitMEX at least $6 million, and BitMEX have told the news sources that BitMEX's legal department has actually contacted 3AC regarding the next steps forward for them both. So that's the margin calls and liquidations that we know from 3AC so far. But they've also closed their own positions at a very heavy loss. On the Bitfinex exchange, they came second on the leaderboard for the total realized losses at minus $31 million. If you don't know what realized losses are when you actually close a trade. This means that 3AC could still have unrealized losses on the exchange. Unrealized is just having the trade still open. So it's absolutely crazy to see that such a huge firm has had such bad luck during the market. They've had all of the stuff going on with the Luna collapse. They've tried to make it back by leveraging long everywhere, and the market's dumped even further, which means they're getting liquidation calls, and they don't have enough liquidity to save themselves from liquidation. It creates a bit of a cascading effect if 3AC can't pay back the loans. It's going to be interesting to see just how much the market is going to be affected going forward. I'd say that they could consider bailouts from other firms if another firm decides to take that step. But it looks like 3AC are going to have to continue to sell its assets, or any that they can, just to lower the liquidation price and also pay off any loans that owe. If anything else changes, I'm going to be sure to mention that in the next news section that I want to do every single week. I think one of the biggest issues that you get with VCs is that when you invest in so many, especially startup projects, your tokens are locked for a long time. So if anything, happens to those tokens, like what happened with Luna, if it's locked, you can't actually do anything with it. So I think that was the case for 3AC, is they invested in Luna. It was $200 million, but they had no way of actually getting it out because those tokens were locked. Yeah, just very unfortunate. But if anything else changes, then I'll be sure to mention it in the news section that I want to do every single week. This isn't the news section. This is just more of an analysis on 3AC. If you enjoyed the video, then please leave a like, a comment, subscribe. Just follow all social medias that we've got. All of it's in the link in the description below. And yeah, stay tuned for the next video. Hope you all enjoyed, and I'll see you then. Goodbye.